Hey, this is Drew, A to B Invest. Just a quick little video to help some folks understand the whole finance side of a transaction. Agents, maybe help your buyers qualify for more home as a buyer. Maybe you want to qualify for more home, or you don't want to buy a home and have no cash left over. You spent every last dime you had to be able to close on this house. We want to put you in a situation where you've got some money left over to maybe get some new appliances or pay for some landscaping, some new carpeting or paint or something for your home. So let me go over a quick transaction. I've used simple numbers, so the math is simple, but follow me, okay? Here we go. By the way, we do have a Facebook page. Check us out there. I've got some other videos posted there as well. But let's take a regular transaction here. We're in the Phoenix market, so this is a fairly average price point here. But let's say you've got a home listed at $210, and your buyer, or you, the buyer, have negotiated a purchase price around $200,000. Okay, for simple math, with a 5% down payment, your down payment is $10,000. Now, closing costs on a transaction like this will be around $5,000. Escrow fees, title fees, prepaid interest, prorated taxes. It adds up, and on average, you're looking at $5,000. So total cash needed to close to buy a $200,000 home is $15,000. All right, now follow me. Once you've negotiated your purchase price at $200,000, before you actually put anything on contract or you've agreed with the seller, or before you open escrow, go back to the seller and say, let me offer you $205,000 for your house. It's still below the list price, but above what they agreed to, and you pay $5,000 worth of my closing costs. Same net price to the seller. The seller is still basically getting $200,000. However, they're now paying $5,000 of your closing costs. Your down payment's going to go up slightly because you're borrowing a little bit more, you're putting less down. But your down payment goes to $10,250, and guess what? The seller just paid all of your closing costs. So that's it. That's all you're coming out of pocket with is $10,250 instead of $15,000. With this strategy, you're keeping $4,750 in your pocket to do some kind of upgrade with to the home, or just have some reserves, go buy some new appliances, or all of these numbers here, your list price, purchase price, down payment, all this can go up. If you truly have $15,000 to spend, you now could qualify for something in the $235,000, $245,000 range. So with the same amount of money with this strategy, you either qualify for more, or you can get a seller to pay some of your closing costs and have money left over in your transaction to do other things with. So if this is helpful, we've got all kinds of strategies like this that'll help agents and buyers with homes. And if you have any questions real estate related, we're happy to help. A to B Invest. Follow us and like us on our Facebook page. Look for other videos there, YouTube and Instagram. And again, this is Drew with A to B Invest, and look for me on our next video.